say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound.
Welcome in to another episode of Just the Tips. This week I'm your host, Gordon. With me as always are Bruce. Say hello, Bruce.
What's up?
Yeah, that was great. And George. Hi, George.
What up?
All right, so everybody, just real quick before we dive into all of this, make sure to follow us at Stock Jocks Tips on YouTube and on Twitter and I don't know what else. But I'll just give my usual disclaimer. This is not financial advice. This is just entertainment. Consult your attorney, your financial advisor, whatever. This is just for fun. But other than that,
what do we do on this pod, Gordo?
why? Glad you asked. So this is a forum where every week we pick a stock and we argue both sides.
Or every 4 weeks, yeah.
Oh yeah, that's a good point. Yeah, it's a stochastic process. It's like tends to be kind of every other 3 weeks ish. But anyway, we love doing this. We're just busy people. So we take the bull and bear case for a stock, and one of us picks a side. It may not be a real side. We'll reveal our real side later, but we, like lawyers, we fervently argue the side that we've been assigned to, and also. We do talk about sort of topics in the news, and we haven't done it in a while. George hasn't. I don't trust Bruce because he always just does like a techno thing. So I'm gonna need a news break sound from George.
I'm more the 1930s style. Breaking news.
I like that. Okay, so let's just talk about the markets for a second. So I was doing some field research at a bar last night. And I met this 42-year-old consultant, and working at...
What does she consult on?
The federal government. No, she was not, working at the bar. It was not Vegas. And
not your STDs.
Anyway, bringing it back. Hung up those gloves some time ago, George. So anyway, she said that Doge has just absolutely and utterly destroyed all demand for federal contracts. The consultants are working, at 30% capacity, and she loves it because she can look for other work. But, this thing is she said the human impact is really grossly underestimated, and so shit ain't happening. And so they're a not immaterial part of the economy, right? I mean, I was out shopping today, and I was like, I haven't seen these prices kind of roll through yet. I'm not sure when they're supposed to roll through yet, but once again, feel like we're sleepwalking. The market's, up 20% year to date? I mean, it does not make sense. The dollar is weakening. This is, I don't get it. Mr. Market is high on cocaine. Oh, yeah, here we come.
Vigorous.
Bruce is he's got the punch bowl. He's always ready to party. He's got the helicopters, the bunnies dropping out. Tell us about...
Dude, our guy DJT is just toying with us, dude. When he wants the market
really?
to go up, he cuts tariffs. When he wants it to go down, he increases tariffs. He's just the puppet master. You guys just don't know how to watch the show and enjoy it.
6D chess. Well, it's like Jim the Greek. Well, who said it? Said you might as well lay there and enjoy it. It's going to happen anyway.
Is that your prison motto?
I just, I don't know what to say to that. So, yeah, I'm definitely a top. So, anyway. I feel like I continue to feel very fearful, I mean, there's some bright spots in the world. It seems like the pockets of tech, like CRWV, there are companies that are just absolutely, there's a handful of companies that are on fire. Heck, I was talking to a remodeling company recently, and their business was up 20% last year. There's some pockets of things that are happening, but at the end of the day, I feel like at some point here, I mean, are they going to cut rates? I mean, like, I don't know. We have tariff-based inflation coming. Can they do that in that situation? Like, what? Bruce, please lay out for me why
All
I'm
of this
so
is man-made.
nervous, Nelly.
This is just all man-made. Like nothing in this is like systemic. It's just Donald Trump plus Doge plus everything else just being kind of fabricated out of thin air. Like we don't need to be in any sort of crisis. It's just Donald Trump is angling for something, and he's going to use tariffs and the economy to get it. And so I think when the pain gets too high, he ends up rolling it all back, and the market ends up responding. I think the fundamentals generally have been pretty good. Like the earnings, this season have generally been pretty strong across both the growth sector as well as even more broadly. And like maybe that's because the tariffs haven't rolled through yet. But I think like if the pain gets too high, he's going to turn down the temperature. So I just. This isn't like the GFC or like it feels just a lot different. I don't know, to me at least.
I mean, there's
Plus,
still a lot of
you-
tariffs in place, right? Like that's the thing. I mean, China. We were so excited that China and the United States are kind of backing off a bit here and cooler heads. But there's still a lot of big tariffs. Or was it 10? He's still incrementally 10% on everything. Like that's not. I'm lost track of where we are on the implementation of that and when they go into effect. And like there were some moratoriums. Like
10% though on a $3 Temu tchotchke is only 30 cents. So
gosh,
it ends
though,
up being okay.
how much of our economy is we're importing way more than we export. Right, it's hugely important in our economy. So
Yeah, but that's we've always. I mean, we've done that for decades at this point.
we haven't had 10% tariff across the board across all countries ever. I mean, this is insane. Right,
China already had a tariff on it from his last term, and it wasn't without tariffs, though.
Yeah,
I think the other thing is, I think the other thing is too. Like, if the pain gets too much, he'll just take the tariffs down. Like, he doesn't want to actually crash the economy. I think. Like he's less sensitive than he was in his first term, but like clearly this whole like we're pushing out the European tariffs for a month that he just announced yesterday. Like we're pushing out the Chinese tariffs, we're pushing out the TikTok ban, we're pushing out everything that's going to cause pain as soon as it's about to happen.
Yeah, but businesses can't flip on a dime. People can't be rehired on a dime. Like, trust is broken. We debated this a little bit last time. It's like how much, it's great for him to flip on and off tariffs, but like as a business, planning your capital expenditures, planning your marketing, your ad spend, all of that stuff. If you're a consultant working in the government sector, as we were just chatting about before we got on here, and Doge cut all those contracts. Like those don't just get snap your fingers and reinvented. So like some of this stuff like has lasting marks, I think. And look at consumer confidence; it's tanking. People are nervous, right? There was a really interesting stat to me. I don't know why this struck me so much, but people are talking about fast casual lunches in the restaurant sector, and they were saying that lunches now, like during the middle of the day, is like lower than pre-COVID, like the amount of people that go have lunch, and there's more people in the office, and so like people are tightening their belts, and confidence is low, and that's going to have a ripple effect. So I think all this like yanking by DJT is going to screw up the economy. Like you can't just flip a switch and have it come back on.
I think a couple of things. I think like the economy can absorb a lot. I think you're right; it will create some near-term volatility, but I think like over the long term, it'll end up getting settled, just like everything else has in the past. I also think like we're generally like at some point he's going to offset this by like forcing Jerome Powell to make an interest rate cut, and like. That's going to turbocharge the economy.
Or tax cuts.
So, like, yeah, or tax. Like, there's a bunch of things that, like, I think could happen to offset some of this near-term volatility that will have just as big an impact as, like, him threatening to over-tariff China or whatever. I don't know. I think there's, like, too many variables to just isolate it to, like, one or two things. But I think when it's like, man-made, it gives me, like, at least a little bit of comfort, especially given his behavior. Like, he doesn't want the pain. If he wanted the pain, he wouldn't have backed off of any of it.
That's the point, though. The damage has been done here. He's already driven this car in the ditch, and you're saying he can just drive it out.
He can. He can. Look at where the market is today. He pulled back.
It's a Cybertruck. It can go anywhere.
Yeah, I mean,
when JP cuts interest rates, it'll go up another 5 to 10%. Like, I mean, he can. He's got a tow truck.
wow.
Not a Cybertruck.
You sound like
just
David
don't know who's
Sachs.
driving it,
You've
man.
been cupping David. You hang out with David Sachs.
No, I'm just look. The market is telling us where the economy is right now, guys. So, like, as much as you wish for it to be down, it's not.
Well, the AI economy is definitely on fire. That is not showing any cracks. We've got NVIDIA reporting this Wednesday, which I think is going to be, it's almost like a national holiday now. So that'll be interesting to see. But I mean, everything else in AI that's reported, right?
Holiday.
Whether international holiday, yes, everybody.
I mean, people are saying there's push-outs, right? I mean, at least Supermicro was, and so it'll be very interesting to see like what their market share kind of looks like, or if that's just Supermicro specific. But CoreWeave crushed it, right? So we can, they're
well, okay, it's interesting, right? I mean, I think they grew 400%, right, which was somewhat expected. For the year, they're getting around $5 billion, which is up from almost just under $2 billion. So like they're going to grow healthily, not 700% again. The market the day after actually went down for CoreWeave a little bit because they announced that they were going to spend almost $22 billion on capex. $22 billion. Now this is not a Mag 7 name. This is already heavily.
$5 billion, spending 22. Like that's that. I don't know. I mean, I went to kind of an unknown, business finance school, but that definitely doesn't sound like good economics, good unit economics.
Well, it's good for someone. A lot of that 22 is going to find its way into NVIDIA's pockets.
Oh yeah, NVIDIA, who also upped their stake in CoreWeave. So between once that news came out, like it seems like the stock has just been...
they had a really strong reception to their debt offering. Basically, like post earnings, everything went up and to the right. I mean,
but they've got to do a huge dilutive equity raise here at some point. And so, like, the question I have is like someone driving up the stock here pre that equity raise. Like, that's kind of what it feels like to me because it didn't feel like the market loved the earnings. Great, NVIDIA owns a little bit more. You got $2 billion of debt, so you're able to get more debt. But like, it doesn't feel like there's a good fundamental reason.
Who's buying?
If you're going to get diluted, like why are people buying this thing up hand and fist?
Sure.
I don't know. Because the market's going to carry all boats. Its tide's ripping. I don't know. On a slightly related note, our guys at NBIS also reported.
Yes.
And they also, lived up to expectations. Stock is
almost 400% as well.
That's our next podcast. That's our next podcast, I hope. Well, actually, we got to do our scoreboard podcast where we measure our dicks, and I always come out biggest. So, do I leave that in the edit? I don't know. I think I'm going to leave that spicy one in. So
the lump doesn't count for on the girth measurement.
Well,
I'm hung like a horse. Why? So
this is the only stock that George has listened to me and actually bought in his actual PA.
I know. He never bought.
Think about that. Is that true? It might be true, actually. Most were a good call to avoid.
You're welcome.
Well,
you don't get
we'll see
credit
how it
unless
ends.
you get them in the stock. Yeah, this one time. Good job.
We'll see how it ends. For a while there, it felt like
you could end right now. You could sell it right now, up like 100%.
No, I'm not up that much.
You bought it the wrong time then.
All right. So are we complete on this?
When you told me.
All right, guys. Shelve that. Take care of that. Our next little boys trip together into the mountains, just the Tips Mountain. So anyway, are you guys complete on CoreWeave? Anything else to say? What we basically Bruce concludes the AI market is just on fire, and fuck fundamentals, just buy that shit. Basically.
Yeah, I mean, I think all the Mag 7 had great earnings, great capex forecasts for the most part. They're continuing to spend more. No one's showing cracks. I'd be shocked if NVIDIA does not have, outside of Supermicro, which is probably its own problem. I think I'd be shocked if NVIDIA doesn't just crush it this quarter.
I mean, NVIDIA is also trading at like in a reasonable price range. Like they're trading at like 27 times earnings. Like that doesn't feel crazy. I don't know.
No. for the
And the growth
premier.
rates aren't that crazy, right? And they never are. It's just
NVIDIA has historically traded at like 50 times earnings. Like,
Yeah.
if you liked it at
Yeah.
50, you're gonna love it now.
trees don't grow to the sky, as they say. I still will say though, ChatGPT, man. I mean, it's unbelievable. It's just unbelievable the apps that you can do with this stuff now. I mean, even the other ones too. And I feel like it's getting better.
only
I
gonna get
like it.
better.
I've secretly been using a lot more Grok these days. I don't know if you guys have taken that.
Oh
for a
no.
Well, when I do my research on the Holocaust, that's my favorite one to go to.
Is
tells the truth.
ChatGPT too woke for you, Bruce?
No, I like ChatGPT, but I just find like the content from Grok can be better because it's sort of sourced from Twitter and stuff, so it's like more real time, I would say. Whereas like ChatGPT is only based on like the internet, and so it's like a slightly different flavor. It can be a little more sewery, but they generally do a good job of cleaning it up, so it you don't feel it. It's worth checking. It's worth just using the same query on both of them and seeing what you get, I think.
Somebody mentioned Claude to me. I don't know who that is.
Claude
Graphic.
is actually just dominant, I think, for like enterprise software developers. Like when I talk
Yes.
to enterprise software companies, like Claude, Anthropic's Claude is the dominant platform. Like they're using that for everything. Like people are coding like 80-90% of their applications with Claude right now. They just released this model. I think you guys may have seen it, where they basically like had to like add in additional safety features because they ran trials. I don't know if you guys heard this. They ran trials where basically they told Claude that the developer that was working on the project was having an extramarital affair. And when the developer went to shut down that version of AI, the AI started bribing him, saying that it would
You mean extorting him, right? Saying I'm going to tell people.
yeah, so it's saying that it
Blackmail.
would tell people. Yeah, exactly. So right, not bribing, extorting him.
Yeah, even better,
Which is
maybe.
like pretty freaking scary, dude. We're like, I don't know. It feels like we're like 3 years into this. Like, I mean,
I'm
ChatGPT
scared.
launched
I'm
in
using it for
22.
stuff now that I can't believe. Like I used it to like create like measured responses with my ex and on text, and I use it for legal advice, and it gives me forms to fill out. I mean, this thing is insane. I mean, like it's becoming indispensable to me. And like I've just started kind of being more aggressive with ChatGPT. I used it to prepare for an interview. It gave me Q&A using my resume. Gave me answers with my resume bulleted. It is insane. And we're not even like the next round of this. What is that going to look like?
I know we're not even in double digits yet. Like we're not at like ChatGPT 10. We're still in the fours.
Yeah, I mean, when's 5 come out? I mean, oh my God. I mean, it's going to be like, it doesn't feel like AGI is that far. I mean, like, I don't see there's anything that the AI can't do better than us, very soon. So then,
No, we're as the kids say, we're definitely cooked.
yeah, we are cooked. We're like the is it Sigmoid?
Yeah.
Well,
or Beta.
OpenAI also acquired what's his name, Johnny Ives' company. So
Yeah,
they're
that was just
contemplating
a small
device.
little tuck-in talent acquisition,
For
acqui-hire
$6
deal.
billion.
55 people, $6.5 billion, no big deal. Well, I mean,
All
what's
paper.
what's
Like
$6.5
Cisco,
billion
man.
between friends?
Cisco
Like-
does that. Like, send your friend, they said goodbye, you're not going to work here anymore. Oh, we'll just buy you in like 5 years and get you really rich. There's no self-dealing to see here.
They already own 20% of the company, and then they bought the remaining 80 for just an insane number. Like,
I mean, it seems like this happens all the time in Silicon Valley. Like, people leave companies, that are going to eventually acquire them, and
Yeah.
they go develop outside where shareholders can't see for a while, and then they come and get bought by much other companies. Nobody ever sees the financials. Victimless crime.
dude, I wonder how the guys at Windsurf must feel because they got acquired like 2 weeks ago for $3 billion. They must be like, we actually built something, and you're paying us half. Like, what in the entire fuck is going on here? Like, we have a product and users and revenue. like,
But they were only
yeah.
the second choice, right? They weren't even the first choice for the
I know.
coding agent for OpenAI. So you can't, when you're the second prize, you only get half the money.
There's definitely a joke in there somewhere. Some kind of joke about marriage or something. My second wife, my future second ex-wife, you don't get as much. Sorry.
There's less to go around.
I will direct her to the pod. I mean, like, listen to this. Here's a cautionary tale. You're not getting much as the first one. All right, that's good. That's a good note to end on. Let's move on to Uber. And so, in one corner, weighing in at 167 pounds, only a light criminal record, very tired and not very coherent, Bruce,
Scene.
All right. I'm sure you guys will make fun of my title, as you always do. But can you see it?
Hail me some returns.
Sadly.
Sig hail me some returns, right? Or is it the
Yes.
Grok generated title?
You know what? I actually used Claude. I thought Claude was supposed to be the most creative, and I think all theirs suck worse than this. So this is DT generated or JT.
You had the DTs? So that's actually a very good. I will give you credit for sizzle. I mean, you got that embedded logo animated. Like that's kind of like Brucey style. I mean,
There
so,
we go.
let's see,
No
the
lasers.
font is
There's
dog
kind of
shit.
lasers in there. They're just they're
Lasers.
horizontal and vertical.
C
All right.
minus.
C minus.
Look at Bruce just
Passed.
laying there like a fish. I know what that look is.
Passed. All right. I'm gonna go through my 25 slides here in record time. So buckle up.
That was a
gentlemen.
joke. I really hope. If there's more than 5, we're gonna recircumcise you deeper.
All right. I do have some excess I could get rid of. It's
what I hear.
causing issues.
It's from all the
All right.
friction, scar tissue.
All right. Anyways, down to Uber. All right. So I'm going to do a little intro on Uber. Just make sure we have our grounding here. So I don't think I really have to explain too much what Uber does, but I will in a second. But I start a little bit with just the stock, the financials. So they're a $184 billion market cap company. I was actually surprised they were that big. I didn't realize it until I looked at it. They've got almost 51 billion of revs expected in the next 12 months. So they're doing a lot of business. Now, of course, a lot of that goes to the drivers. It's not a high margin business in the end, but 50 billion of revenues. Of EBITDA, they're expecting about 11 billion in the next 12 months. So in 51 billion, they're getting 11 billion of EBITDA. Revenue is expected to grow 14% year over year, or grew 14%, I should say, and EBITDA grew 35%. So they're growing profitability faster than they're growing revenue right now. And what you're seeing is, I have a chart kind of since they went public of them versus the S&P 500. So they've outperformed the S&P 500 by a little bit, not by a lot. For a while there, they were really kind of a laggard. They benefited during COVID, kind of 2021. They took off a bit, really because of, first they suffered, and then really the delivery business, which we'll talk about in a minute here, kicked in. Then when, the market started hiking, when Powell started hiking rates in 2022, what you saw is unprofitable companies or barely profitable companies really getting hammered. They got hammered. They went down to kind of their lows. And then since mid 2022, it's just been a climb, and it's kind of climbed and outperformed the S&P 500. So since, their IPO, which I think was 2019, somewhere in that time frame, they're up almost 120%, and the market's up almost 100%, the S&P 500. So they've slightly outperformed there. And they've been doing all right, and they've been driving a lot more profitability. The 3 lines of business quickly are mobility, so that's what everyone's used to. You book a car to pick you up. Then they have delivery, that's Uber Eats, of course. And then what people probably aren't familiar with and shouldn't be is freight, Uber Freight. So for a while they were making noise. That was going to be the next big thing. It hasn't really become that. So if you look at kind of their business, most of it's split pretty evenly between mobility and delivery. So 49% of their bookings were mobility in the first quarter of 25. Delivery was 48%. They're also growing pretty similarly. So mobility growing 20%, so ever so slightly faster than delivery at 18%. Mobility does have better margins, so this is not a high margin business, as I mentioned up front. You have a lot of, almost like pass-through revenue that just goes to the driver. So when you look at that 51 billion of revenue, only on the mobility side, 8% falls down to adjusted EBITDA, but that has been increasing. On the delivery side, those margins are really thin. You're looking at, 3.7% in the first quarter, but they are driving both of those up. And then again, freight is more of what I would call kind of an option here on this business. When you think about, U.S. domestic versus international, they can do about half of their bookings from international. So they have about 30 markets that are really kind of their core markets, with the U.S. driving, roughly 50%, international roughly 50%. Here's some of their big metrics that they point to that they watch. So they have what they call their MAPCs. This is basically people who use a platform on a monthly basis or active on a monthly basis. So that's been growing consistently between, call it 13 and 15%. In this latest quarter, it grew 14% year over year. So you've seen that for really the last 5 quarters here that I'm showing on here. And then they track, even amongst that group here, how many trips are they doing per those monthly active users. And that's continuing to increase, though it's slowing down. So they were seeing kind of 6%. Now they're seeing 3% growth on those monthly active
It
users.
looks like it's all flatlining the quarter over quarter. I mean,
well, in the last 2 quarters,
quarter.
yeah, it's been flat, but they both ticked up from the previous quarter, the Q3 there. So, it's still we will see. I mean, it's
It looks like it could be even going down in most of those categories.
well, I would call it's a steady growth rate, right? So 14% on the MAPCs, which is probably the most important, is a respectable growth rate. And if you're continuing that, yes, you're not accelerating your growth rate, but it's not slowing down. The business is not slowing itself; it's still growing 14%. So just to be clear there.
Sequentially, though, like those are probably easy comps. Like if sequentially, if the business continues to flatline around 170 or 60 or 3,036, I mean, is there growth left in the business or?
There's more places to go and more things to be delivered. It's a huge TAM.
This might be a bottom line game and not a top line game, huh?
I'll take these days anything that's growing mid-teens is pretty decent. I mean, your best growers are struggling to get 20%. So if you have a business that's growing bottom line and still growing top line, at 18%, I would take that all day, every day.
But that's year over year. Sequentially, it's negative.
Yeah, you can't look at quarter over quarter. You got to look year over year. I mean, because there's seasonality trends in the business. So end of the day, like. Yeah,
we need a couple more quarters back to really understand the trend line, I think.
I mean, if you look, I'm listen. 18% is the same quarter from last year. That's the trend. It's up 18%. If you look at trips, if you look at constant currency bookings, it's up 18%. To me, those are healthy numbers, which I will gladly take. Here we talk about adjusted EBITDA. So they are driving more and more profitability. That has been a focus for them. So for a long time, we were all used to getting our Uber rides super cheap, getting Uber Eats, supplemented by investors. That's no longer the case. So they are driving profitability. They have, a dominant name in the spaces they play. They're well known. They don't have to overpay to get drivers anymore. They, don't have to market as much to get consumers to use them, less promotions. And so you're seeing that grow. So in the first quarter of 2024, you saw the adjusted EBITDA of 3.7 growing to 4.4% in the most recent quarter. So that grew 35%. Again, growing bottom line even faster than top line. And top line is still growing despite what Bruce says. So now that we've kind of set the baseline on what they do, here's just kind of, I'll go quickly through the bull case. So this might be one of my fastest ones yet as we kind of just jam through this. But really, this is kind of the money slide. So they are a clear leader in the spaces that they play, especially mobility. Lyft really has not, been a real threat to them. They are the dominant player. And I think even in the delivery market, really, they have one other, major competitor. And other than that, they are kind of the go-to name. So you're getting kind of the clear, strong leader in these markets that they play in. And they've got a strong history of growth, within both of those, and they still have some optionality with freight if they can figure that out. And they're seeing more and more crossover between mobility and delivery that really none of their peers, at least domestically, do. And that gives them more and more ability to drive synergies. So both more of those trips, per monthly active user. And again, you don't have to market to customers in the same way. If they're already a customer of yours using your app, you can easily, get them to say, hey, try Uber Eats. Let us highlight that. Let us send you a coupon. It's a lot cheaper to, get your existing customers to spend more. So I think they really have a nice kind of synergy between those two businesses. The bear case is probably going to focus on what AV companies are doing. AV companies are autonomous vehicle companies, and so what's been interesting is you've seen Waymo, who, depending what part of the country you're in, you may see or may not see. Most folks probably don't see them all that often. If you live in the Bay Area, you see them, or in Phoenix, you see them a lot. However, Waymo is starting to partner with Uber. So you order your Waymo through your Uber, so you don't need the driver. But Waymo is finding value in Uber's app, network, brand, to really, help connect with consumers. And so they're rolling out 2 new markets with Waymo now in Austin and Atlanta. So you can order whatever type of car you want, whether it's with a driver, without a driver, or, what's available. So it's great to see that, these providers are seeing value in the Uber network. So Uber will profit either way, whether, AV companies are the dominant force, or, human drivers are out there. They also have a capital light model that has sustaining power. So I think one of the beauties of the Uber model is they don't have to own any of this network, these cars, anything. They are just the middleman. They are a market. And so while we, criticize that, hey, they have low margins, really a lot of that's just pass through. They have very little risk. If someone doesn't do, business on their platform, like, they're not losing, they don't have sunk costs that they have to cover, and we bought, 100,000 vehicles. What do we do now? We can't use them. They have a very capital light model. And so for a lot of these AV companies, they don't have that. As an example, like, Waymo is estimated today to, cost between $200 to $250K per car, just to outfit it with everything that's needed to get it on the road. And then you have to also maintain that. So Waymo can't just throw out 1 million of these cars tomorrow.
What about
and
Tesla?
expect to. What's that?
What about Tesla?
Or Tesla, which is unproven at this point, but yes, or Tesla, right? Same thing. It's not going to be a capital light model. They're going to have a lot of capital. And yes, Tesla is a big company, but even Tesla, like, think about how many
Their
cars are in
much cheaper. They're because they don't use lidars in their cars. They just use cameras. So
less safe.
the bomb is super super cheap almost, and they have billions of data points at this point. Like, full self-driving right now is 8.5 times better than a human driver. So,
well, I would actually disagree with that, having taken Waymos, but I would not trust a Tesla without lidar.
And I have
LiDAR is a much better technology. I mean, if we won't go into it here, you can even go watch some of the great videos that are out there. But there's certain things that, the camera model that Tesla rolls out is not as proficient at and not as safe at. So I'm skeptical that Tesla, he's muscled his way through the government to get approval to test out, his Teslas, but I'm very skeptical that he's going to have success without some sort of lidar that's going to get attached.
I honestly don't think so, because I have a Tesla that I use FSD on, and it's basically perfect in every scenario. Like, I think there's some edge cases where it's not going to work potentially, similarly with Waymo, but like, it's for like they measure everything obviously, and like, it's gotten mass adoption.
Well, have you put up the? I love the video. I forget the gentleman that does it.
That's such an edge scenario, though. It's like completely unrealistic. And like,
what about fog and rain?
Those
are not
in
unrealistic.
front of a car, maybe it will crash because it thinks it's a road. But I think that doesn't happen.
That always got Wile E. Coyote. So why
I know, exactly. Exactly.
For people that haven't seen that, they put up a picture that looks exactly like the road behind it to see if the car will stop, and the car using lidar stops because it senses an object. The light bounces back.
It was paid for by the Pelosi Sanders AOC campaign to dethrone the king, Elon.
I haven't heard that, but I will take your word for it. Either way, it makes for some entertaining YouTube watching late at night. So we will see what kind of car. The only car out there, the cars that are working today that are out on the road all tend to be LiDAR based, and that's very expensive. So even if it's not LiDAR based, even if you're rolling out, Model 3 cars, that's still 30,000 a pop, where Uber's cost is zero.
Yeah, but
So-
30,000 a pop that's running nonstop with no driver, like on a lifetime value, is pretty reasonable. The unit economics are amazing.
Great. Then people will book them through the Uber app, and we'll all be smiling, afterwards.
book-
It doesn't
they're
make a
gonna book
difference to Uber.
Tesla through the Uber app.
Yeah, why not? They've got the network.
I'll cover
got,
this later.
They've got everything figured out. They've got the software. They've got delivery. It's all there. All right.
I mean, I'll cover it in a minute, but
Going
there's no real moat to using an Uber app versus a Waymo app. Obviously, that's
Well,
that's
then why is
that is
Waymo rolling out with
a
Uber?
non-existent moat, because you can use the Waymo app in San Francisco like everybody does, and it works just as well as the Uber app. And it's really, they're not going to give a margin.
But who
for it.
gives more rides in San Francisco?
Uber does for now, but that throne is slowly getting eroded away. Meaningfully. And the reason is because, as maybe you showed here or somewhere else, maybe you didn't show it, but it's because the Waymo rides are currently more expensive. But that pricing curve is going to change meaningfully in the next 5 years.
Well, I will tell you.
That price curve will only go in one direction. I think we can all agree on that.
Well, I will tell you, I took a Waymo to a very important business meeting I had to get across San Francisco, and it completely failed me, and I wish I had taken an Uber, because it pulled up, the car looks and it sees, less traffic in the next lane, and so it goes over the next lane, and of course there's a UPS truck with flashing lights blinking there, and it pulls up right behind it and gets stuck, and then no cars let it pull out. It's just stuck, and then every Waymo pulled up behind me with the same logic, because it looked and said, okay, this lane's more empty. And I ended up missing my meeting. I sat there for literally 15 minutes trying to get this car to turn, and no one was letting us in. So I don't know. I wish I had taken an Uber. What's that?
Should have yelled at the driver.
I did. I had to roll down the window and beg someone to let the car turn in, literally. So that was not a good experience. But anyways, my point being that the Waymos aren't necessarily, they're safe. They're very cautious. If you're in a hurry, I would not take a Waymo today. I would still take an Uber. Anyways, reasonable valuation is kind of the last one, and so I'll move to valuation here with my last point. So if you look at Uber, I compared it to kind of three different groups. So you kind of have the mobility players. So you have some of the car rental, you have Lyft, you have Grab and DD. So those are your mobility players. You have the delivery players, so DoorDash, who is kind of their main competition, and then you have Maple Bear, which is Instacart. I never knew they were actually called Maple Bear as the public company. And then I picked some with similar growth profiles to Uber. So I looked at companies that were growing right around that kind of 15% mark, the same as Uber, and grabbed Dynatrace, Guidewire, Palo Alto, and HubSpot. Those are kind of the three groups.
But there's really, some very, you have them here, pure play comps. I think comparing Uber to Palo Alto Networks or HubSpot is a pretty long putt. I don't know.
I'm just
think
saying growth with
Lyft,
a brand name.
DoorDash, Grab,
By the way, long putt. That's the first time I've heard that. That is really good.
Maple
I'm
Bear.
shocked by the valuation, 183 billion. Yeah, they got 50 billion revenue.
They make money. That's why. They definitely make money. There's no doubt about it.
Look at the market caps of all these other companies, though. Avis and Hertz are combined 6 billion. I guess they probably have debt issues, but where's the EV on those? I don't know if it. But yeah, I feel like I'm just sort of blown away that Uber is almost if you took Palo out, which I agree is kind of I'm not sure that's the same.
Palo, HubSpot, Guidewire.
Yeah, there's some.
They're all growing 15%. I'm just making three groups.
Those are enterprise software companies. They have 80% gross margins. They have 5-year lifetime value.
But they trades, it trades cheaper on an EBITDA basis. So if you get rid of the margin issue,
Those
I'm not
companies
trying to
trade on revenue though, for the most part.
They're profitable, right?
But
isn't Palo Alto profitable?
But they're still over investing in growth. I don't know.
Yeah. So what I would say is they are the brand name where they play. So if you compare them to both mobility and delivery, like they trade right in line on almost all these metrics. And like they are the brand name, and so they should really be at a premium compared to those. Whereas compared to companies that are growing similarly, they trade at a discount. But so even if you say, okay, ignore the Palo Altos and that comp group, like I think you've got a better growth story here that's been consistent. A company is driving profitability, and oh, by the way, at least not. I don't know if it's still held this week, but as of the week before, they were the fourth best performing name in the S&P 500 this year. Fourth best. So,
You guys are saying the
they.
market's overheated.
I think the market's correcting on Ubers. Like, I think they've been overpunished, and people are recognizing, like, hey, here's a story that's driving both growth and profitability. It's a leader in its space, and so like it should definitely be at a premium to the rest of this group. So if you look at the metrics, because I haven't really talked about them here out loud for the listening audience. It's not an unreasonable, metric. So if you look at forward EBITDA, they're trading about 20 times that, 30 times or 31 times on a PE basis for a company
But
growing
what's the right
15%.
metric to value the company on, do you think?
I would say, EBITDA is probably a good metric. And then you can look at the EBITDA divided by growth. Like I think that's also very, reasonable here. So on an EBITDA basis at 20 times, I think that's in line with the market, the broader market, right? It's not that
Yeah.
far
I mean,
off
the
of
Uber
it.
comparison is, there's a really incredible penalty to Uber for being the distant number two. I mean, like,
Lyft.
looking at the revenue, I'm sorry, yeah, Lyft. Yeah, so they're paying, they're like 9 times, I think, the revenue Uber is, but they're like 30 times the EV to EV. And they're not growing that differently. Like, Lyft is growing like, 12% and they're growing 15. So, like, I kind of feel like that delta, like there's a 40% premium, 50% premium, 1.3 times on EV to EBITDA to growth versus
Yeah.
zero point 0.9. So I'm just like, I don't know, like it just seems kind of
Well, look
pricey,
at
you know.
Lyft has clearly lost the battle, right? Like they don't have the other side of their business. They don't have delivery. Like look at DoorDash. So half their business is Lyft, half their business is DoorDash, and they trade at a discount to DoorDash. DoorDash is growing maybe a little bit faster here, so just a tad under 20%, but forward EBITDA is like 28 times versus 20, forward PE is 42 times, versus 30. And then when you growth adjust, that on the EBITDA basis, it's still more expensive. And so like it's a discount to DoorDash, but it's got, a higher margin mobility business that's growing just as fast as their delivery business, gives them some diversification and some cross-selling. I think I would rather own Uber technology for the long term versus DoorDash. So to me, I think there's still upside if you look at a DoorDash and say, yeah, they should trade more like a DoorDash. And the Lyft is really not a valid comparison.
But
Like they're
why,
a
why?
lost company.
Maybe both of them should trade down, though, right? Like, why shouldn't maybe both of them converge to where Lyft is trading, or at least closer?
I mean, Lyft, I think, has been a unsteady performer, right? It's kind of up and down. They have a new CEO. It's very much a show me story at this point in time. They just turned profitable. It took them longer to do that than Uber. So I think it's been more of a company that struggled versus like a fair market value for a mobility business.
Why should this thing keep growing in the teens like this? Like, who's taking Uber more than they were? And like, there are some like little market share sort of nibblers here and there, but like, I'm not. I mean, there's a macro component to this, right? Like, people are taking Ubers less to go to the bars for discretionary trips. I mean, business will always do it, but all those layoffs and federal contracts, those folks getting in Ubers when they go visit their. I just don't. How? Why would this thing continue to grow like
They
that?
were
I don't know.
having a ton of, I don't remember the stat, unfortunately, but they were, a lot of their business was like to and from the airport. And then what they've seen growing more is the, away from the airport business on the mobility side. So that you continue to see growing. It's trips, other trips that people are relying on Uber for, whether it's home from the bar or across town to make a business meeting. That's really where you're seeing them continue to grow. And then, of course, they have the international presence, right?
I mean,
So it's not just the U.S. market.
could car availability be good for them? Like probably, the economy's shitty. People can't buy their own cars, so maybe there's a little bit of like a rent versus buy. Maybe there's or substitution. As people can't afford cars or can't get them. There's tariffs. You can't get prices are going up on cars. I don't know. Like I'm trying to.
I think as you have an aging population too, like it took a little while for my own mother to get comfortable, but she gave up her car, and now when she wants to come visit her grandchildren, I send her an Uber, and she comes on.
Send her a Waymo. She'll be really comfortable. No driving.
She doesn't live in San Francisco. It has a very limited area I can drive. So today, yes.
I love seeing her in the East Bay. She's doing so well. So she looks good for 80, whatever. She stays shape in the garden. I'm just saying. I'm just taking care of it for you, man.
All right.
So let's move on to the
Taking over on a high note.
I can't wait to see the lasers.
We touched on some of the themes here in terms of what I was gonna say.
By the way, the title, I'm going to give you points for drama, creativity, and catchiness. I don't know. There's got to be a better title than both of these. So I'm going to say you guys kind of not super impressed. But
well, Claude couldn't come up with a better one. I will tell you that.
Yeah. Well, I just used Chat GPT 0.0. So this is just all me.
I was trying to use the name, like some nameplate, like Uber Shitty or Uber Garbage.
We have a lot of 7th and 8th graders dialing in, so we don't.
It's just something like McUber, like just gonna blow up. I don't know. I'm just working on. I'm just working.
We got
on
to
this.
find the right demo
now.
here for some of these references.
Yeah. Who's
Well,
listening
you
to
haven't
this
even
anyway?
said it. You got to remember probably the majority of our audience can't see our slides, so you got to actually read out your title here.
Okay.
Yeah.
All right, got it. Okay, so what I said, my title is Uber driving into a wall, with the lasers and everything blazing.
By the way, still the right template. I don't know why George can get on the bus.
Yeah. I know he used just like for the record for people that can't see George's presentation, he used about 75 different fonts in his presentation.
I noticed that. I think that his mother is working on the deck.
I didn't know what I was looking at. There was like 65 calls to action. Like it was a mind fuck.
It looked like word perfect.
Keeping you on your toes.
Yeah.
Anyway, we'll replace you at some point with Claude 7.0. All right, so moving on to the first part of the analysis. Whoops, we moved ahead. So the thing about Uber that we just talked about, and I don't think anybody can see anything because it's too small here, but there's a real, I think, existential threat. Can I see that?
That's a little better.
Sorry.
Maybe you can walk us through it.
I'll walk you guys through it. But basically, the first bullet says, Waymo, Tesla, game over. Waymo and Tesla will quickly erode Uber's core markets with autonomous vehicles and partnerships. Can't save them. We've alluded to a bunch of this, but basically, the next several years we'll see a very, very quick ramp, probably similar to Uber's ramp in its early days in terms of autonomous vehicles entering the market. Both the expensive version that's being deployed in San Francisco and Austin and LA and a couple other places with Waymo, but also a really cheap version of it with Tesla. Their cars are much cheaper. They don't use LiDAR technology, and so they can deploy millions of these in any city that will allow them to. They have billions and billions of data points because people have been using full self-driving for years at this point. And so, as I mentioned maybe earlier, the full self-driving today is 8.5 times better than a human driver. So if you're in a Tesla that's FSD,
as measured by how? Because like I said, my experience was not that. So what do they measure 8.5 times?
But your
better?
experience, almost by definition, is an anecdote. You have to take all of the data points which they're reporting on as a public company. And so it's like, this isn't, you can't kind of make these things up. Like I use full self-driving a decent amount, I would say, and it's always performed like very, very effectively. Almost
just
too
because you're
effective.
drunk coming home from the bars and you wake up in your driveway doesn't mean it was a great experience.
That is actually the definition of a great experience.
Actually, I'm going to wake up in the driveway.
You're not doing a good job. You're not doing a good job pushing the non-AV case by saying that's not a great experience. Anyway, the chart that I'm showing,
you don't know how in danger you were in the middle of that.
I got home safe.
My good night, I wake up with midgets, okay? Like, you guys have a low bar, If there's not a couple midgets in the car with you, Gidget,
Well, the
midget?
next time you're gonna wake up with some midgets in an Uber, so you know.
Yeah,
we'll
that's
throw
actually.
that in.
Yeah, they can't drive. They get really drunk. Low tolerance.
All right. Anyways, walk us through the chart. We're getting off course here.
So anyway, the chart here, what it shows is 3 lines. This is the San Francisco market for ride
only
sharing.
San Francisco.
So
Okay.
only San Francisco. Yeah.
The most
the
tech-forward market there is.
Well, give me a second. The top line is Uber's market share. The second line is Lyft's market share, and the third line is Waymo's market share. And you can see that very rapidly, Waymo has overtaken Lyft to become a more used rideshare platform than Lyft, the second biggest player in the market from this market's inception.
It looks like they're equal, but yes,
It's
trends are
overtaken
going.
it. It actually overtook it by like a couple of percentage points. But like you can see the trend line here is like they're gonna not only overtake them, but they're gonna fully surpass them. And the trend line for Uber is the same. It's just if you extend this trend line out a couple more months, a couple more years, like Uber's market share will go away to Waymo. And this is test market number 1. Like, Travis Kalanick always said the biggest problem with Uber is having the drivers in the seat. And that's true because it eats into their margin. Like as an operating company, it's a huge liability and it eats into their margin profile. The issue with Uber is they can't develop this technology themselves. It costs billions and billions of dollars and decades of research to build autonomous vehicles. And there's already 2 players in the market that have developed those vehicles, that have spent those billions of dollars, and that will start to ramp these very, very significantly. So, is this something that will happen overnight? I don't think so. Like there's regulations that will need to take place. Like it will slowly ramp over time. But I don't think there is like a permutation where like in 10 years, like every single major city, every minor city isn't using autonomous vehicles. I went to San Francisco, took a Waymo. It was a perfect experience. You didn't even know that nobody was driving like 5 minutes into the ride. And if you go to San Francisco, there's hundreds and thousands of Waymos on the streets stacked up against each other. Their track record is very, very
they're
good.
all stuck behind the UPS truck.
I actually saw the UPS truck, and I saw a UPS truck and 3 Waymos go around the UPS truck. And I actually thought about this question too because there's UPS trucks everywhere as well. And Tesla does the same thing. Like it will go into opposing traffic to go around a stopped UPS truck. It's amazing. Like the technology, like this is a solvable problem. Like it's not something that won't be solved. And so I just think like this chart will be something that you can superimpose on every single NFL city within a matter of years.
So in all seriousness, what I will say is like I do think there is people. What I noticed in San Francisco is people know that the Waymos are super conservative, and so if they just assert themselves, the Waymos will stop, and they stop on time because they're not driven by humans. So people are super aggressive around them. And so like in my example, like if you're in a hurry, it's not an assertive car. It's always going to take the safe way. So it's never going to be as fast as a human driven car. So like there could be, I think, a future where you have markets that, yes, Waymo exists, but you're going to have a service where you're like, I want a human driver because I know what that human driver can do that the Waymo will not, or the Tesla.
I think that will be the edge case in these markets because the reality of the situation is that a lot of people don't take Waymos today because they're more expensive than Uber. And like, why would I take a more expensive version of a rideshare that's maybe going to get me there incrementally slower? Probably, mostly for the novelty. Although, now it's just because, it's the density of drivers, the density of vehicles. But I think once you have Teslas on the road, so the problem with Waymos, maybe to George's point, is that they cost, I actually heard the cost is much higher than $200,000, but they have a bunch of LiDARs on them that make the BOM, the bill of materials for these vehicles, very, very expensive. And so breaking even on them, I think is like, I don't know what the math is, but it's probably very, very hard. It takes like millions and millions of rides and probably is mostly just like a loss leader to get people using the application and using their cars. But the issue is with a Tesla, a $30,000 Tesla, that won't be the case. And so like your choice from from the airport, from SFO to San Francisco will be to take a Lyft or to take a Tesla that's 50% of the price. And that's a huge difference. And they can drive down the cost curve here like meaningfully. And so I think like once you see that happen, the behavior will shift really, really quickly. And I don't think that will happen in like the next 12 or 18 months. But like this is an existential threat to Uber, in my opinion, and I don't see the tide turning it back here.
Can I throw out a theory of what could happen and get your reaction to it. So, we talked about when DeepSeek came out, actually a cheaper model, more ability to, have more cars on the road is actually good for all players. Javon's paradox or whatever, that is. Hopefully I'm not butchering his name. So like I could see like a market where the driving cars are great for like underage kids and, my mother who's in her 80s, and maybe they charge a premium for that because, hey, like I don't want my kids with some stranger. But like it overall like brings down the cost of the whole market, and there's still room for Ubers, there's still room for Waymos, they're expensive cars, Teslas.
I think the difference is like this is a very black and white service. You are trying to get from point A to point B. With DeepSeek, like there's a million shades of gray. Like, does the model do this better? Does the model do coding better? Does the model do imaging better? Does the model answer these queries better? Like for your specific purpose. Here, it's literally trying to get from point A to point B in the quickest amount of time for the cheapest price. And I will regularly test Uber and Lyft in any market today because Lyft is oftentimes like north of 50% cheaper. And I will choose a Lyft, obviously, because the price difference is so big, even if the density of Lyfts is lower. And so I think like once you have a fully deployed kind of Tesla robotaxi system, and you have a fully deployed Waymo robotaxi system, and the price curves are coming down, like you can't compete as a human driver. Like it's just impossible.
What about delivery, or do you think this affects
all of that will
delivery
get
too?
done? All of that will get done by autonomous vehicles.
But your
I honestly
Uber
think,
Eats.
like my real opinion on this is it's like this is kind of like a burning candle, and it's just a question of like how fast do you think it will burn? And I think it will take years and years for it to burn, but there is no way they are going to avoid the existential threat like of autonomous vehicles. Like like this chart itself, like look at Lyft. Like if you ask Lyft, like what does this chart mean to you? It's like our market share is getting eroded by something that we can't compete with. Like full stop. I mean, it just like
Yeah,
I don't.
San Francisco
I don't,
is Lyft's best market too, right?
I think so. Yeah, that's where they started. So like, I just think like you fast forward, you take these curves out like 5 years or whatever. Like they look a lot different. Waymo's the number one line here. Maybe Tesla's the number one line here. Waymo's the number two, and then you have like Uber and Lyft in the corner. Like for some edge case where you're trying to go to like I don't know Fremont or something, like you can't find a Waymo or a Tesla that will take that far. Because it's like far enough away where you maybe won't be able to use an autonomous vehicle. I don't know. That's like the case. Like, because like they obviously are like they're geo-fenced, so you can't go anywhere you want. But I think that will continue to be the case until like you have like more and more regulation that allows them everywhere. But like, I mean, like in 10 years, do you believe like that this like their market share will look like this?
It's difficult to say. Might be a bigger market. They might have less market share, but it might be
I
a
was
bigger
just saying,
market.
they're still growing. Lyft and Uber are still growing despite losing share. So, like, there's going to be, what's the market? What's the steady state for market share of robotaxis? I mean, is it purely going to just be cost and people are just going to go robotaxi? Why can't,
Yeah. If I offered you a robotaxi from the airport to your house for half the price of an Uber, would you take it?
Yeah, as long as the performance is as good, then I don't care.
Yeah, I mean, if you've been in one, it's as good. Like, sort of.
What about the charm of your Uber driver?
Dude, the charm and the smell and the risk and the like. I mean, I think everyone who's been in enough Ubers has been in some weird situations where it's like, what's going on here in a different dimension. Anyway,
You should put voice robots as drivers. That's my new business idea.
moving on.
Full service.
The thing about the thing about Uber, I would say, is like they're sort of subject to like some exogenous factors that could lower the margin. So I showed here like basically different regulations. I showed food providers in different countries and international markets, and I think the thing is like because they're very well operated company, but because their margins are so low, like any of these things could really impact the profile of the company. And so I think they're in a situation where because every single market that Uber plays in is a heavily regulated market, they're continually subject to like the government whim, basically. And so there's this risk factor that they can't control in every market that they're subject to. In all of the local geos, there's a version of DoorDash effectively. And so they're competing against a local provider that has the exact same business model where, again, you are just going to go to the lowest provider. You don't care who it is. There isn't something like the stickiness of their business is really the density of the drivers. And I don't think that really exists in many markets because there's at least two competitors. And so I think they're very, very susceptible to margin pressure, despite the fact that they have like generally like an internationally, dominant position. And then lastly, on valuation, and I think George touched on this. It's not an expensive stock. It's not a super cheap stock. It's less than a Rule of 40 company, so paying kind of a premium multiple for it on the PE side feels like there's more downside risk than upside risk, I would say. EPS growth has grown and historically reasonably well, but it, according to the forecast, looks like it should contract pretty substantially here in the out years. They're in hyper competitive markets, as we mentioned, with really, really small moats. I mean, their moats are really, the moat is really their brand more than anything else. Like there isn't, Waymo's moat is its technology. Tesla's moat is its technology. Uber's moat is like people know what Uber is as a company. And so, I show a little hot potato here because it is like one of those things where it's like I think like it is a reasonably priced company with with an excellent management team that's done a very, very good job sort of building enterprise value. I just think they're in a market that eventually is going to get compressed by, factors that they can't control in the long term. In the near term, there are factors like on the regulation side that they won't be able to control either. But it's hard to like handicap what type of risk that is. All that to say, I think it's a reasonable company. It just, there's a lot of overhang here that you'd have to get comfortable with. It isn't one of those companies where you can like Warren Buffett your way in and be like, our whole period is forever kind of thing. Like you need to be like, my whole period is like 1.5 years. And, the CEO Dara is going to continue to execute like he has really since he took over, which has been, almost flawlessly. But really like at the end of the day, like, people are going to shift wholesale over to AVs.
I do think, mobility probably goes faster than, again, if that market goes, than delivery goes. Delivery, you still have someone, like, not everything is set up, right, for a machine to go, pick up an item and then deliver that to a person's house, right, or a person's door even.
Drones.
I don't know.
Drones
It seems
are
like
possible,
it seems like a solvable problem, especially like if you can pick up like 30 margin points. I mean,
I think that's going to take a long time. There's a lot to work out, right, with that. It's a much more complex problem. So I think at least 50% of your revenue here that's still growing at, 18% on the bookings on constant currency, like is completely safe. And then it's just a question of what you believe on the mobility side.
I think they're both at risk. Like I think one will happen before the other, obviously, but I don't think there's a scenario where like in 10 years where you're not ordering from like a robo taxi Uber or Tesla. Sorry, robo taxi Waymo or Tesla, and it's showing
The
up.
employee will just come put it on a tray in the car, right? And the car
Yeah.
will come, and you have to go out to the car and get it. Maybe
Everybody's going to do better. The restaurant will do better. Like Waymo will do better. The customer will do better. Like you'll know exactly when the car will be there. There won't be any trips. It won't eat any of your food. Like
you have to use the bathroom. Yeah. It would spit in your
There's like
food.
those little robots. I think this was out of Postmates. I put them on the comp list just for fun, even though they really don't have earnings. Called Serve is the ticker SERV.
Yeah.
I forget if that's the name of the company, but they do little like delivery robots that go down the sidewalks, and so they're focused on like local delivery. Because when you think about it, it's like you have a big Uber car with a person in them today. Like that doesn't feel an efficient way to bring Gordo his tacos from Taco Bell late at night. It seems like there should be something that's more appropriately sized and uses appropriate amount of energy, etc., to do that task. So it is interesting where that market could go, but it feels like it's a long way off.
Yeah, it could be a couple of years. But in the meantime, though, like this is, that market is also viciously competitive, both domestically and internationally. I mean,
Why do you think so you've painted a pretty bad picture here. Like, why do you think this stock is rallying the way it is? I mean, it's the results are still good, obviously. They're still
Yeah,
growing. So
yeah. I mean, I
do you
think
think like investors aren't dumb? So like there's
yeah. I
people are
mean, look,
buying
I
the bull
think
case.
I think in the early years of Netflix, Blockbuster continued to grow reasonably well, and then at some point it ended up not. Like I think there is an opportunity for both, like, the DVD market and the streaming market in the beginning, but eventually, like, it's just the streaming market that matters, and so, like, it's just a question of when that happens, not if it happens.
I like your
I
analogy.
I think so. But I honestly, I do think the management team here is very, very good. Like, this is, if you are betting on, CEOs, which everyone should be, in my opinion. This is not stock advice, but you should definitely be betting on management teams disproportionately more, I think, than anything else, is what I've learned. This is an excellent, like, tier one
Dario is very good.
management team.
Well, maybe last question for me. What do you think about the rumor that they were going to buy his old company, Expedia, right? And then you could see them bundling Uber services. A lot of it goes to and from the airport, right? So you could bundle mobility there with a whole package. Do you think that provides?
I think Expedia is a very good asset to own, like, in isolation. I think, like, the synergy is tenuous. And even if you go to the airport and you have a ride that's 50% cheaper, it could be even more. It could be like 70% cheaper. Like, you're just going to take it. And there's no driver, so there's no risk. Like, it just, I don't, like, I do think they have to change their business somehow. The fact that they're looking at Expedia is, like, probably a signal that they see the writing on the wall. I don't know.
Well, Gordo.
All right, well, let's so this is the time of the show where we kind of, like, open the kimono, and let's just kind of go around the horn here and just start with George. Like, what's your real opinion? You really a bull?
No, I picked this because I'm a bear. I think this thing is in trouble. And it's interesting that they continue to do well. I like the analogy that Bruce made, where it was just like, it's like Blockbuster was doing well while their disruptor was at the door for a while, and that kind of feels like where it is. And it's not an expensive stock for how it's growing, but it's an expensive stock when you think about the risks that exist to their business, right, from technology. I think the candle analogy was also perfect. It's like the candle is burning, and when does it hit the wax, right? When does the wax start melting away? Like, the timing here is really hard. And so if you said, would I be long? No, I would not be long the stock at all. Absolutely not. I just don't think the upside is there. I think, at some point the wheels come off and it's gonna hit hard. But that could be a long way out. Like, that could be 5 years away, right? I think they could continue to do well in international markets. They could continue to operate in some of these partnerships in the meantime. I don't know that Tesla is going to have smooth sailing. Like, their capital light model, I think, will last. So we could be wrong for 5 years. I could easily see that. So I don't know if I would, I've told some people, like, oh, this is a short. I think Lyft is more of a short in the near term. Not a lot of market cap there. But, like, end of the day, like, I would not be long this stock. I would stay away. I'd think about a short. I'd look for some signs of cracks before I would actually jump into the short. Versus trying to be early to it. I'd rather miss that first kind of leg down, but then jump in and see if you could ride this thing down to pennies.
Bruce?
So actually, funnily enough, I'm actually, like, a short-term bull here, even though I have a bear gaze, which I think is how this pod is supposed to work. But basically, like, I do think, like, this is an existential threat to the company. Like, I would never hold this in, like, 2030, right? But, like, for 2026 and 2027, like, they have, the operating leverage to really, I think, continue to drive share gains, to drive partnerships, like, however frivolous they might seem on the surface to me. Like, I don't get why Waymo would partner with Uber, but nonetheless, here we are. And so I think Dara is, like, an excellent CEO that will continue to like, unlock shareholder value, like, as much as this market will bear. And so I am a short-term bull. I wouldn't hold this, past, like, 18 months probably, but I do think, like, This guy's a compounder, dude. Like, he was at Expedia. He was compounding the shit out of Expedia. He came to Uber. He's doing the same thing. Like, I don't think you want to bet against a guy like that in the short term, at least. Like, the market, like, yeah, I think, you hold this for 5 years. Like, there's way better markets, I think, or way better companies where they don't have an existential threat. But like, this is a guy like you gotta root for. I don't know. He knows how to operate.
So are you really a buy on this? Like, if we look back after 10, you would say a buy. So what is our time frames? I feel like that's always a lost kind of comment, because I do agree with you. I don't think in the short term the bottom falls out. But I don't know if I'd want to buy something that still feels like an existential threat sits there.
I mean, we're kind of like, it seems like we're doing the scoreboard like every kind of few months now, or I guess it's every 6 months or something. So maybe we call it by the time our next scoreboard comes around. So but I guess you could call it a year, like the sell side, right? Like, call it a year, maybe. But I personally, like, I don't want to buy anything on a short term. That just has such an obvious fundamental flaw. So I'm gonna force myself. I'm not much of a trader. I guess I would want to be on the sidelines, but if a force, I'd be short. But I really hate that chart. That chart says it all.
The momentum is not in our favor, right, Gordo? I mean, they're the fourth best performing stock this year. So that's something that I would.
Fucking Moe's. It's not a way to invest. This is why I never make any money. But I want to short everything. Okay, well, I mean, this has been a great episode, gentlemen. Thank you for your time. As we always wrap up, we say, was it bulls make money, bears make money? Pigs get slaughtered. Bye, everybody.
Make money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla.